Welcome to ShortView Trends, your morning market here for Tuesday, 12th of January. What matters today for traders? Is liquidity tightening? That is the big question we've got to ask ourselves. And it matters enormously for markets because they've been so liquidity fueled over recent weeks, months, and even years. And clearly that tightening in liquidity is what's been troubling markets in the last few days. If you look at the Nasdaq yesterday, particularly weak on the session, the DAX over the last couple of days, something like the South Korean Kospi, which had an enormously strong move at the start of the year, struggling in the past couple of days. And indeed, this is a topic we explore in much more detail in today's Daily Rag, which is available to subscribers via the website, and in which we give our 1 to 2 week recommendation on equity market futures and update all our key market timing models. But let me give a flavour of that topic here. It is so key, the question of whether or not liquidity is tightening. And clearly this whole thing began with comments from a number of Fed governors and the Fed minutes over the course of the start of this year. Indeed, we've had a number of Fed governors over the past 2 weeks at the start of 2021 raise the topic of discussing tapering, the idea that maybe tapering might begin the back end of next year. They should start talking about it maybe later on this year. Indeed, only yesterday we had another couple of Fed governors on the stumps, Kaplan in particular, the Dallas Fed guy, making comments along those lines, all of which backs up what we saw in the Fed minutes. The minutes were published on the 6th of Jan. They related to the Fed meeting in mid-December. And in the minutes, that idea of tapering was raised once again. So this is clearly a theme that's brewing. And we've seen market price action starting to reflect this. The dollar's been rallying for a few trading sessions. Bond yields have been backing up sharply in recent trading sessions, and you can see that in the chart in front of you now. And key liquidity indicators, key barometers of liquidity have been struggling, whether it's Bitcoin coming off sharply from its $40,000 high, or whether it's gold that struggled in the last few trading sessions, up a bit yesterday but down a lot more in the past week or so, or indeed silver. So there's no doubt that tightening liquidity is having a bit of an influence in the short term, and of course, as I mentioned, it's affecting some of those liquidity barometers. But the question is, where do we go from here? And interestingly, if you look at the dollar, in the short term, it is now overbought, as you can see on the chart in front of you now. And in the short term, bonds are oversold. Bond futures are oversold. Bond yields are backed up sharply and are now sort of overbought, if you like, the other way. So markets have moved dramatically in the past week or so, bonds and the dollar in particular. And the real question is, how does price action play out from here? Is this just a mini wobble, a mini move? Or is this the start of something more sinister? So in that respect, it's encouraging to see indices like the S&P 500, which haven't really wobbled. They've really gone sideways in the past few trading sessions. So despite having a sell signal on our risk appetite scoring system, our short-term RAG scoring system, 1 to 2 week time frame, despite that, the S&P's held up, which is a really good sign. Whilst we see tightening liquidity elsewhere, it's encouraging that the main equity market in the global equity market, the main index, the S&P 500, has held in at its sort of high levels. Equally, what we'll be watching this week critically is what the main Fed guys say. So a lot of the Fed governors speaking this over the past 2 weeks, they're all important, but they're not the key guys. The key guys, of course, are really very much Clarida and in particular Jerome Powell, as well as John Williams of the New York Fed. And both Clarida and Powell are speaking this week on Wednesday and Thursday. That'll be critical. To date, Powell's been pretty clear. He's up for tons of liquidity, tons of monetary support, and he's all about getting the unemployment rate down. So we'll be watching those closely. We'll be watching the price action of the dollar and bonds, given they're now overdone in the short term. And of course, we'll be watching all sorts of markets for and other liquidity indicators to give a sense of where we go from here. But for the full analysis of the liquidity outlook and how we see it, please see today's Daily Rag, available to subscribers via the website. So what are we watching in terms of these markets? Well, clearly the price action in bonds and the dollar is critical, as is some of the liquidity barometers we talked about, Bitcoin, gold, and so on. Over and above that, in terms of macro today, the NFIB Small Business Optimism Index is interesting, as is the JOLTS data, and we got another Fed governor speaking, George, later on. But really what's critical over the course of this week is a couple of things. As I mentioned, Jerome Powell and Clarida speaking will be absolutely key. And then, of course, we begin the earnings season for the US on Friday with the banks. That's when it begins in earnest. There are bits and pieces before that, but the banks in particular will be watched very closely and begin to set the tone for the earnings season over coming weeks. So So that's it from us. That's your morning market hit for Tuesday, 12th of January. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on Twitter, LinkedIn and or Facebook. Thank you for listening. Stay safe. Trade well.